All right, good afternoon. As promised, we're delighted to be joined by the Undersecretary General for the Department of Economic and Social Affairs, Mr. Junhua. He is joined by Shari Spiegel, the Director for the Financing for Sustainable Development Office in DESA, and Oliver Schwank, the Chief of Policy Analysis and Development Branch, also in DESA. They're here to present the Financing for Sustainable Development Report 2026. USG, please, you have the floor.
Thank you. Well, good afternoon, dear friends from the press. Thank you for joining us today. On behalf of the Deputy Secretary General, I'm pleased to present the Financing for Sustainable Development Report 2026, implementing the Sevilla Commitment. The report was drafted by the Interagency Task Force on Financing for Development, representing a collaboration of over 60 UN and international institutions, including IMF, World Bank Group, WTO, UNCTAD, and the UNDP. The main message for the 2026 FSDR is clear and urgent. Development progress is imperiled by the global fragmentation, geopolitical tensions, and conflicts. Developing countries are trapped in a catastrophic financing squeeze from compounding shocks. The implementation of the Sevilla Commitment represents the best hope to close widening financing gaps and achieve the SDGs. With only 4 years remaining to deliver the SDGs, we required a massive scaled-up investment. On contrary, regrettably, the financing gap is widening. Development aid is falling sharply. In 2025, 25 countries decreased their official development assistance, leading to a 23% overall drop from 2024 to 2025, the largest annual contraction on record. Only 4 countries met the 0.7% target: Denmark, Luxembourg, Norway, and Sweden. Based on preliminary data, ODA is expected to further decline by another 5.8% in 2026. Developing countries, especially the poorest, face mounting debt pressure, with debt service burdens hitting the 20-year heights. The international financial system has not provided sufficient long-term financing on affordable terms for sustainable development. Multilateralism itself is under threat. Powerful nations are redrawing trade and investment alliances, often at the expense of the poorest countries. This undermines the very foundation of the global cooperation. These challenges were recognized at the 4th International Conference on Financing for Development in Sevilla, where the UN member states agreed on the ambitious Sevilla Commitment. However, the FSDR 2026 shows that these pressures have intensified, with a financing squeeze and increasing fragmentation exacerbated by conflicts. The recent conflict in the Middle East, for instance, has triggered a significant shock on an already fragile global economy. While the ultimate impact will depend on the conflict's duration and severity, and the resulting arrangements for shipping and trade, we are already seeing the clear repercussions for developing countries in relation to the energy, food, trade, debt sustainability. Despite these headwinds, the FSDR 2026 reveals the resilience and determination of the global community. In implementing the Sevilla Commitment remains our best hope to overcome the fragmentation and achieve the SDGs. Let me share some positive insights. First, global growth was unexpectedly resilient in 2025 at 2.7%, while still below the pre-pandemic 3.2% level. Certain regions and countries performed exceptionally well, with South Asia leading at 5.6%. Second, the value of the South-South trade has increased substantially, now accounting for the 54% of the total developing country exports. Third, renewable energy investment reached a historical $2.2 trillion in 2024, finally surpassing the investment in fossil fuels. In a promising sign, many member states and partners are already putting the Sevilla Commitment into practice, particularly through the Sevilla Platform for the Action initiatives. Just to share a few examples of what this progress looks like. Since the Sevilla conference, the Inter-American Development Bank has completed the 2 issuances of Amazonia bonds, totaling approximately $800 million. At COP30, the Green Guarantee Group launched the world's first centralized publicly accessible global database of the green climate-aligned guarantee instruments. Spain and the World Bank launched the Global Hub on the debt for development swaps, building on the record growth in the debt swaps in 2024 to free up this physical space for SDG investment. These actions are timely and essential to confront the severe headwinds of the fragmentation and the financing squeeze. In closing, I want to reiterate that implementing the Sevilla Commitment remains the only viable path to bridging the financing gap towards the SDGs. The world is now looking to the collective political will of the member states. We must move from the rhetoric of the commitments to the mechanics of the concrete actions. Thank you.
Thank you very much. We'll take your questions. Edie?
Thank you very much, Mr. Undersecretary General from the United Nations Correspondents Association for doing this briefing. My name is Edith Lederer from the Associated Press. Every day in this room, we hear about humanitarian missions around the globe that are drastically underfunded. Where do you think the funding from is going to come from to meet the development goals for 2030? And if there is no funding, what's going to happen? Are we just going to carry them over for another 10 years? Thank you.
Which one of you would like to take the question?
I have to go first.
Well, for us, the dominant challenge for achieving the 2030 agenda is financing gap. As you rightly said it, we see the gap is not narrowing but expanding. Where those funds comes from us, we thought that from the Sevilla Commitment provides a sort of path out of this. First, to triple MDB capital pools. Second, to invest to attract more private investment for the SDGs. And third, to increase the domestic resource mobilization through this domestic reforms. Perhaps my colleague may add more details.
Right. So I think actually Mr. Lee covered it very well, that the Sevilla Commitment lays out a roadmap for increasing investment in a very challenging environment. And where we just, as the USG said, saw the ODA numbers that just came out this morning that showed that it fell 23% in 2025, which is significantly higher than was expected, between 10 and 17%. So, but the Sevilla Commitment focuses very much on the multilateral development bank system and the public development bank system, and leveraging the system to increase investment by increasing it by 3 times. It focuses very much on leveraging private investment and finding mechanisms and tools and instruments to do that. And then the focus on domestic resource mobilization within countries and doubling support, international support for countries that are trying to increase their domestic resource mobilization. And I think that the system has come together around those areas, and there are already initiatives happening to put those into place.
Thank you very much. Stefano, and then Linda, and then Frank.
Thank you for this briefing. Stefano Vaccaro, La Voce di New York Ital Press. I was just reading. This is a press release, but I see that there is no one name of a member of the United Nations of a country. So my question is, in your report that we I assume can find online, do you have a ranking of where this 23%, for example, of less in development assistance, of where it comes from, the minus 23%, and have where we can see the countries that basically are not helping the world, if there is a ranking of which one. Because I know if I ask you, probably you're not going to tell me, but can I find those countries online?
The report, the data for 2025 was just published this morning. So you can find those numbers online, published by the OECD, and we will do a short summary that we will also put onto our website today.
Linda, then Ephraim.
Thank you. I have a question about the role of domestic governments. How prominently does good governance versus bad governance figure into a country's ability to make it or to improve its situation? In other words, what policies, I mean, I may be mistaken, but I had heard that lots of countries don't even have taxes, don't even tax their citizens, those who can pay. There's corruption, et cetera. How prevalent is that in the mix?
Great, thank you. So good governance is very prevalent. Is very much part of the story. I think most countries want to raise taxes. Now, some countries, obviously, there's corruption, which is an issue that is constantly that is part of the understanding and the discussion of how to address that. At the same time, many countries don't have either the resources or the capacities to put in place policies that they want to put in place, including to raise domestic resources and taxation. And so there are now 70 countries or so, 76 countries that actually have tax that is below the 15% threshold that is considered the least amount necessary for countries to be able to manage their fiscal positions. And so the discussions in Sevilla really focused on how this international system can help those countries particularly raise that tax levels, and both in the terms of addressing illicit financial flows is one part of the discussion, and we just had a meeting in ECOSOC on those issues. And a second part of the discussion is helping countries build the capacity to be able to raise resources, including to be able to use technology to better do this. And the third piece is international tax cooperation, because right through transfer pricing, et cetera, companies are able to move resources, their profits to, especially in the digital time, it's very difficult to tax some of those revenues. So how can we as an international community create rules to be able to reduce profit shifting between countries? And that's part of the discussions happening at the UN under the UN Framework Convention on Tax Cooperation.
Thank you. Ephraim?
Thank you so much. It's Ephraim Kosaifi with Arab News Daily. I have two questions. The first for Ms. Spiegel. Could you maybe bring closer to home the impact of the regional war now on the SDGs? Where does that leave us with the goals? Which goals were you the most right now and were the most affected? And then a second question for whoever can answer it. After a year in of the administration in Washington and the fact that it introduced major cuts for developments worldwide, I wonder how is that reverberating across the world right now, a year in, and how do you see some sort of pattern being followed also by other countries? Thank you.
So in terms of the conflict right now, so it's clearly having an impact. First, it's a shock that's exacerbating was already a fragile global economy. The immediate impact is on, as we know, on energy prices, but also trade and supply disruptions, on energy, fertilizers, and food, and leading to energy and food insecurity. It also is having a particular impact on countries that have high tourism and remittances, that are dependent on tourism and remittances. It's all of that together, and that had the impact on inflation. Of course, the question of how much this is going to have in the long term will depend very much on the severity and the duration of the conflict, which is hard, which we don't yet know. But they are already having impacts on financial markets, and the bond yields have already risen. For developing countries, the higher borrowing costs and weaker currencies put pressure on already fragile debt situations, so that if inflation is sustained, then certainly there's a risk of slower monetary easing or even raising interest rates, which could have could push countries into debt distress. So these are risks that we are facing. The severity and the implications are still to be seen. And the countries that are most at risk are maybe countries that have high levels of debt already, but are also tourism dependent, energy importers, and dependent on remittances as well. So there's a lot of uncertainty, but the implications could be very large, the risks are very large, which I think is why the Sevilla Commitment had a debt package, and it's really important to continue to implement those measures to be able to support countries if we do go into a situation where countries are pushed more into debt distress. In terms of the U.S. administration cuts, we see those numbers. Their U.S. ODA was cut 50%, and we see those numbers in the 23% drop. But a large number of countries, I think the five biggest ODA providers all cut their ODA last year. So it wasn't just the U.S., which had the biggest decrease, but all five of the top ODA providers cut ODA last year. So we do see reverberations. I mean, there is expectation based on a survey that it will, as the USG said, that ODA will fall another 5.8%, I think, or 6% next year. This is to put in the comparison that before 2024, ODA went up every year. So now to see this but countries have reprioritized spending, which is broader than the U.S. So I think that this is a real challenge, a challenge for the SDGs. There are lots of discussions, but both the importance of increasing that support again, and how to better use the money that is there to make it more effectively used to ensure that those countries that are most dependent on ODA have it. And for the poorest countries, it is still, official development assistance is still macroeconomically significant in their countries. It still has a very big impact on the macro environments. I don't know, Oliver, if you have anything to add to that. No. Okay.
Thank you. Sinan?
Thank you very much. My name is Sinan Tunçdemir from the Amargi. I have a very general question regarding, actually it's a little bit similar, but I still want to hear more details about the Strait of Hormuz. I mean, there's a peace process. I mean, it might not get anywhere. There's like 50% chance, at least I can tell. Is there a time frame if the Strait of Hormuz stay closed? How long, I mean, especially when it comes to the poor countries, is there a time frame for collapsing economy in those countries? And in addition, can you please a little bit more tell us, everybody's talking about the oil goes through the Strait of Hormuz, but we would like to hear more about the countries who relies or depends on the fertilization comes from this strait. Thank you very much.
Okay. I want to be a little bit careful answering this because I would really defer to our economics team. So we are the financing team, and I would want to make sure that whatever we answer is in line with what our colleagues in the economics team would say. So I'm going to be a little hesitant in responding in depth. I think that there is already an impact on some countries' fiscal situations. Countries are already feeling this. So where and it's so different for different countries as well. So the question of how this affects tourism is for small island developing states and for countries that are tourist dependent, for how much this affects remittances, and then is more than the strait itself, right? So So I think it's very hard at this point to put a number on how many months one would have to wait. So I would just say that and the way that in the that the risk of all of this has just increased substantially. And therefore, from the public sector's perspective, the importance of putting into place ways to help countries now, given that the risks have risen, is really important. So even if we can't quantify the very fact that the risks to countries have risen and to different groupings of countries have risen from different perspectives, means that it's even more important to begin to put into place ways for the international community, the international system, to put into place to strengthen the safety net to be able to help countries that this may trigger. But to be able to, I would defer to others on the specifics of your question.
If I may, I would also encourage you to look at the reports that are published by UNCTAD and UNDP, which have a more kind of immediate look at the impact, especially when we talk about fertilizer and goods. Pan, and then we'll go back to you, Edie.
Thank you. This is Yun Zhaopan from China's Xinhua News Agency. I have a very general question. With only 4 years left and so many challenges, is it still possible to achieve the SDGs by 2030? Thank you.
Thank you for a question. That I think that SDGs cannot be met unless there's a global cooperation, targeted actions, and also strong political will. That is something that we absolutely need at the present moment. But even say by 2030, the blueprint cannot be met, but still serves as a blueprint of the global agenda, sustainable development agenda. It should go beyond 2030. Thank you.
Close it out.
Just a quick follow-up. You said that the United States was one of 5 countries, major countries, that have seriously cut investments in the SDGs. What are the other 4 countries?
So my colleague quickly double-checking. And it's not that it's cut investments in the SDGs. It's cut official development assistance. So the concessional finance. So, yeah, there are other types of financial flows that are also investments in the SDGs. So this is just the ODA numbers, and let's see if Oliver can find it for you.
Just a second. I just want to be extra sure. So, yeah. So the point is that the 5 largest providers of ODA have all cut their aid in the last year. And that includes the United States, but that's the other countries are Germany, the United Kingdom, Japan, and France. So all 5 of those have cut, and together they account for the vast majority of the cuts, over 90% of the cuts.
No.
And
The U.S. was the largest at 50%. The others were much smaller.
to be clear, sorry, these are OECD
Yes.
numbers, right? They're from the OECD. Yeah, sorry, Linda.
Okay, and my question is, while they're the biggest contributors, they've made biggest cuts, but are they still the top donors?
Yes, they are.
They all are
Yes.
still the top
The United
donors.
States is still the second largest donor in terms of volume.
And have any,
After Germany. Germany is now the biggest ODA provider.
so it's Germany, what is the list? Germany, US?
Germany, the United States, the United Kingdom, Japan, and France. This is in absolute volumes.
And have any of the other G20 countries perhaps stepped in to increase or be generous?
So out of the total of, there are some countries, I think 2/3 of countries of ODA providers have cut, but about 1/3 of ODA providers have increased their aid last year. Yeah, so there are some. We would have to look up which ones increased their aid.
Yeah,
And at the same time, South-South cooperation has also been increasing significantly. So the numbers on that are published separately, and they're a little harder to, they're not published as systematically. But that has actually increased 5 times, I think, 4 times in the past 20 years. So it's been but the trend on that has been to also increase
But in
substantially.
general, it's safe to say that the top 5 contributors are still providing the majority of ODA.
Yeah, that is correct.
Okay.
Very quick, Stefano, and then we're going
No,
to go.
very quick is because you said that there are countries that actually increased. It would be fair to tell me at least a couple of names because they deserve it, at least as an example for other countries.
We will post it on our website. It's also on the OECD website, and we will post it on our website as well today.
Thank you. Thank you.
Thanks.
Yes, of course.
Yeah,
Yes,
can
you
I
please.
just add one more element? We need to be very vigilant. For ODA, it's under the UN obligation. And for South-South cooperation, that's an initiative among the developing countries. It's a different context.
Thank you very much. Thank you.